So we're live trading the CL now using the machine learning system. We got long here at 60, 69, and then we get enough here not to trigger the stop move. And we pull back to just below the entry and then take off. And then the stop moves at plus 10, 2, 3. Yeah, so if we'd gotten that plus 10, we would have got taken out right there. And then plus 15, move stop to break entry, and our move stop to entry plus 1. And now trailing by 20 with a 40 tick target. And will we add if we break through that? Let's see, what is that distance? 60.69, so 99. Depends on the close of that bar. If that bar closes at 99 or more, the system will do an add on the break. Okay, and so the issue, so for members that were, particularly those that were in the room, we were struggling trying to figure out why I was getting an extra stop order placed. That happened in this earlier trade here. Where is it? So earlier I got long here, and then an extra stop order was placed right there that took me out before it moved to what would have been a scratch trade. And it turned out that the reason is that the dome is open, and I had this auto button checked. And you can see stop loss of 5. So the system's just doing what it's being told to do. If your dome's not open, that won't happen. Or if you don't have auto checked, then it won't. It should be like this. It should be unchecked. If you check it, then this dome is going to send orders as well. And so make sure that's unchecked if you have the dome open. You don't need the dome open. We only have it open to show the price here. But that's why that's happening. All right, so that mystery is solved. Thank you, Patrick. And now we'll just wait and see how this trade works out or not. All right, so we're at 61 here. I believe that if we close, that bar closes up, that'll be a break and entry add just in front of the next target, which is 40 ticks, our first target anyway. It's funny, I've gotten so used to the indexes that watching the oil market here, this is seems like it's like moving like molasses. It's funny how quickly you become, how quickly we forget how sort of normal markets are. It's trailing by 20. It should be, let's see, where's the order? Yeah, 20 tick trail. And I'm just going to pause the recording because this is taking a long time. All right, so that trade got taken out at its trail for plus 10. No, it's a little more than that because I was down -5, so it must be plus 12. Let's see, it'll keep trading until should be 11:20. I don't recall now. Yeah, 11:20. All right, so let's see what another couple hours here. Don't have to watch it now though, because I've solved my my extra trade problem because of user error. So now we'll just let it go. All right, here we are at the end of the session, and my result in oil is $70. So let's take a look at that. There's a couple interesting things here. This is the first I've traded this with the machine learning system live. I had a little bit of a, I think we talked about this already in the live trading, but I had an issue here which we've resolved. So this should be a scratch. Instead I lost 5 ticks there. And you can see along there that doesn't get filled, that would scratch. I like the short here. We don't get filled, but you have to like the signal in terms of what you see there. What I really like is that it's picking sort of the correct peak. So we'll see if that continues or if that's just randomness. Even this, it's a little hard to see it. It's right there. There's a red arrow there. Okay, so I didn't get filled. I'm using a limit entry offset of -2. Even that's like a little momentum move through that low volume node. So I like that, even though that pullback's going to come get you. You'll scratch on that. Get long here, and it's really similar in construction to this sequence up here. All right, where you see it's picking the right peak, or in this case valley, to enter. I like that. And so that makes what, 12 ticks because of the trail. I've since done, we're going to talk about what happens next in a minute, but I've since done some analysis. There was based on a conversation I was having with a member, and we have a lot of cases like this where the the market makes this little bit. All right. Even here, like the trade I was long here, that's not even, that's, what is that? We're trailing by 20, so 32 ticks. Not a huge amount, but not small either. And so I've been looking at using the replay program, different ways to try to find that balance between optimizing for these little moves while still being capable of taking advantage of some of the bigger ones. And in the oil market, what's interesting is sort of the kind of move that happens next. Where you see here, that's a 274. Now I didn't take this trade because I don't have that code listed, and we'll talk about why in a moment. But it's looking like just based on the last 100 days simulation, that we can be quite a bit more aggressive with the stop, and that's what you have to do to capture these little small moves here. And the problem, of course, is that you end up taking yourself out of the bigger trade. And in oil, it certainly looks like you can find a fairly reasonable medium where you can capture some of this, because the oil will make this kind of move here. And it really depends on your entry, where it doesn't matter if you're aggressively moving your stop when your entry's on a bar like this, because the market, it just takes off, right? And so what I saw repeatedly through a bunch of different sort of grid search-like tests where I'm changing the different trail stops, different stop moves, is that I can get essentially the same level of profitability through that simulation run using a smaller trail and a more aggressive stop move after the entry, and then an even tighter trail. And so we'll see. I need to play with that a little bit more. There's some more analysis that has to be done. This particular code here, 274, you can see it catches that break nicely. Okay. And then there's another one here. This 251 actually catches the next leg here. So this entry would be, the way this works is this entry would be on this bar. All right, when that bar closes down. And this one would be on the signal bar itself. Now, neither of these codes are in the system to trade, and the reason is that when I did the grid search and evaluated each individual code, I only picked the ones that had the highest ratio of profit to the number of trades. And both of these show up as profitable codes, but their ratios were relatively low compared to the others, and so that's why they were excluded. So I'm going to keep them out for now. And then, one of the differences between the simulation run and live trading is we start doing things like adding extra contracts, and that's not something I do in the replay. And if we continue to see the codes that are working well that aren't in there, that it's easy enough to add them. Certainly, it's very quick to look very using the replay program to very quickly see. What does what does 274 do? In this particular case, it was it had what I call an efficiency ratio. So the total profit divided by number of trades. It was fairly low. So that what that means is that you're taking a lot of trades to not make very much. And so this is the one that makes up for all of the other little losses. And so the problem with that is that what you see happen when you start adding in these suboptimal codes is that the number of max loss days goes up because you're taking more trades. Even though this might show as a profitable trade over 100 days, if you have to take a lot of trades to achieve that, then that means that a bunch of them are not working out, right? That's how you can infer that. So we'll see. I'm being cautious here as we get going. Beautiful run there, though. So this is the oil market of old that I used to trade. Not used to seeing this now, and when the market's down here just at $60 a barrel. But we used to see this a lot when it was at 100. These nice long runs like this. So hopefully that will continue. And in any case, we're trading oil now, so we'll be in the market to have the opportunity to do that. The 6E did not do so well yesterday. This is in Sim, and the first time I've done this. So I actually started trading this overnight, unattended. So it wants to get short there, but the market's moving up. And then these are using, this is a 7-tick range bar. Yeah, and it's using 7-tick stops. All right, so you're risking, I can't do the math. It's 625 per tick, so. And then let's see, a short here on, that's a nice looking trade right here, actually. I like that, where you as a human, I like that. There's a low volume node right here, and you tagged it, couldn't get through it, and now you're trying again. So you get to first target, and then the stop moves to entry -1. It looks like. Same thing. I want to do the same analysis here that I did on oil today, where it's possible that we can get more aggressive with that stop out of the gate to deal with these cases where you make you're getting just a little piece of it. Along here, that's just a hint early in this case. 1, 2, 3, 4 ticks too soon. 4 ticks getting stopped out. And then this here, the machine just has it wrong. All right, it says to get long there on that pullback, and instead it's rolling over. You can see right there, it sees its mistake actually. Well, you're in the trade now, so we don't reverse. Let's see, and then at this point you're done for the day because you've hit your max loss. And I changed this so it just has these little dots, the little yellow dot, to show you that it's actually making a prediction. But I didn't. I took the numbers off because of the way it's formatted funny, because there's so many decimal points here. Let me just see what I can do about that. The other interesting thing is that this morning, having looked at this and was talking about it in the room, I ran some quick analysis, and what they showed was that all of the profit in the simulation runs are made between the London Open and the U.S. Open, which is actually the U.S. Index Open. So that's what you see on screen here. So for me, that's 1205 to like 625, and then from the U.S. Open through to the end, it was flat or slightly down, just in terms of profitability. So I thought that was interesting. I want to do a little bit more analysis there, but it's possible that I'll just simply stop trading this before the index is open, and then trade the other markets that are now active during the U.S. cash session. And then down here in the lower left, this was NASDAQ, which I'm not trading at all. I'm just staying away from it because it's super crazy. And then the Dow was down big today. Certainly this was down quite a bit. See, the peak here was 68.54. The low was 68. Even so, no, that's since this market is so wild. That's this evening. That's not yesterday. Oh my goodness. I knew it was down more than that. That's why I'm chuckling to myself. Yeah, so it's this nasty fall here that is just just craziness. If you can catch it, of course you're super happy. The problem is that you can't reliably do it. And so then let's take a look at the daily here. So yeah, this is the daily range here. That's an insane level of volatility. 300 points. And the average is still well above tradable range. 100 is the max. So I'm just going to wait for that to settle down before I even come back to it. In fact, tomorrow I will likely not even have NASDAQ up here. Instead, I've almost got gold ready. So I'll be simming gold, euro, and trading CL Live. And that's the plan until sanity returns to the indexes.